Hi there, welcome back to ET Now. You're watching this very special segment, IPO Central, right here on ET Now. And today we'll put the spotlight on KSH International, which is stepping into the capital markets with its 710 crore rupees IPO, aiming to scale capacity, strengthen technology, and expand its global presence. Now, this issue opens on December 16th. And joining us today to talk about the Pune-based company's D-Street debut and the outlook going forward is Mr. Rajesh Hegde, the Managing Director of KSH International. Hi, Mr. Hegde. Thank you so much for joining us today. And firstly, many congratulations on your upcoming IPO. So first off, tell us, how are you looking to deploy the IPO proceeds? What's the growth roadmap that you have? What's that looking like?
Well, we are raising 710 crores, overall, and of that 420 crores is primary and 290 crores is secondary. Of the 420, we'll be deploying about 226 crores to repay the long-term and short-term debt. Then 96 crores is going towards capex, and of which 90% of it is going to be spent in our new facility that's come up in Supa, and the balance is going to be for GCP. And in terms of growth, I mean, we are closely connected to the power transformer industry and the motor industry and and the automotive industry, and if you see, all these three industries are growing at a significant pace, especially the T&D sector, which is the transformer sector.
Right. Mr. Hegde, like you pointed out, a majority of your IPO proceeds, they're earmarked for debt repayment, right? So can you tell us, post the IPO debt level, what's that going to be and the resulting debt to equity ratio that you're looking at?
Well, right now we have about 520 crores of debt, which is both long-term and short-term as of October. And of this 226 crores post-IPO, we'll be paying about 226 crores of debt on which will part of it is for the long-term and part of it for the short-term.
And so part of your, IPO proceeds that's also been kept aside for expansion at the Supa and Chakan plant that you were just mentioning. So if you could give us a detailed timeline for the capacity expansion that you're looking at, when and how is it going to be fully operational? And also the fourth Supa solar plant, when will that be commissioned?
So the Supa solar plant will be operational by April of next year, and almost all of the capex, the last of the capex will happen by Q4 of FY27.
Understood. And if you could tell us, what's the target capacity utilization rate that you're looking at as far as the existing plants are concerned, and what's the expected capacity expansion and resulting revenue potential that you're looking at with the new plant that you just mentioned?
In the existing plants, we are almost, if you see historically, we are at about 80 to 81% capacity utilization. We will continue, of course, over the next 3 years, try to achieve that kind of utilization in this new facility, where the phase 1 has already been commissioned, and phase 2 is what we are raising the debt for. As this new plant is operational since second half of this year, we will continue to utilize the capacity as we go on into the next few years.
Got it. And apart from that, let's also talk about your financials. The last data available, I believe, was for December 2024. So you've seen significant revenue and PAT growth, but margins, they have remained very muted. So any primary drivers behind this margin compression, and what are you doing to reverse this kind of a trend? What's the margin profile that you're looking at?
So in our business, actually, we are in a make-to-order business, and where copper forms a major part of our overall cost, raw material cost. And if you really see, margins as such might look to be muted, but part of it is also because the raw material is a pass-through for us, and copper prices have increased in the last few years as well,
Right, I was actually just going to come to you about that. Only your raw material cost that has remained very high through the years. I was going through your financials. So copper and aluminum both are primary raw materials that make margins susceptible to commodity price fluctuations, right? As you pointed out.
That's right.
So any specific hedging mechanisms that you have or long-term contracts
Right.
that you're signing with your clients to protect these margins?
So what I wanted to say is that copper is a pass-through for every order because, we are in a make-to-order business, and 100% of the copper or the aluminum that we use for every order is covered on a back-to-back basis with our supplier, and that copper price and the exchange rate becomes a pass-through. So you can say we are relatively insulated from any copper price movement that is there during the cycle of manufacturing that is there for our business.
Right. Now let's talk about PAT also. Now, given that you have a very strong PAT, there's potential volatility when it comes to the working capital in the manufacturing sector itself. So, how has your operating cash flow tracked against the net profit over the last few fiscals, if you could tell us? And do you foresee any strain on the operating cash flow due to the ongoing capacity expansion or debt repayment schedule that you have just highlighted?
No, we don't see any significant impact because, from a long-term debt repayment, most of our long-term debt will be repaid through through the IPO proceeds. It's only the working capital that is there. And normally a working capital, if you look at our net working capital days, it's about 75 to 80 days. We hope to bring that down gradually because of certain mechanisms that we'll use with our supplier line of credit as well, and that should bring our overall net working capital days lower, is what we are at least we are targeting that in the future.
Okay, what's the target number? What's the target number of days that you're looking at?
Right now it's I think about 80. And we would try to bring it lower than 80 in the future as well.
Okay. And let's now also talk about your export plans. I believe you export to nearly 24 countries, right? So what's the strategy to maintain the kind of leadership that you have in this position? The global competitors are also there. And if you could tell us if there's been any impact of US tariffs on your business.
Yeah, so we are the largest exporter of magnet winding wires in the country, and we export, like you said, to almost 24 countries around the world. All of our global customers as well as local customers, especially on the transformer side, where we supply our magnet winding wires for the large power transformer segments, are adding capacity as well. So we expect the export volume to grow. As a percentage, we will still try to maintain between 30 to 40%, of our total revenue will be for exports, is our endeavor going forward as well. And if you look at the US market, as of right now, we've not seen any impact in the, because, there is no real capacity of specialty magnet winding wires in the US really that's available. And the US market is growing at a much faster pace because of the push towards renewables and AI and data centers, etc. So we've actually not seen any drop in our overall exports to the US market as well.
Understood. And, you earlier mentioned that you are deeply connected with the power transformer industry, auto industry. Wanted to just, talk about the power space. In the past 2 quarters, at least in the second and third quarter, we have seen some slowdown as far as generation is concerned in the power space, especially because of long-term, prolonged monsoons that we have seen this time around. So has that, impacted your business also in any way?
No, we have not seen any impact of that because, we are generally supplying to either the wind generator companies or the power transformer manufacturers or the medium power transformer manufacturers. And, keep in mind that we are quite well spread out between our customers as well. I think you asked this question in terms of the top 10 customers. They contribute to about 50% of our overall revenue as well, and it's quite well spread out. If you look at, and then 30% of our business also we are exporting. So generally, we are quite insulated from any impact of, if there is a cyclicality or any issue that might happen, maybe for 1 or 2 quarters also.
Understood. And lastly, before we let you go, I know you're looking to list on the bourses. So what's the outlook with respect to revenue, margins and profit for the second half of this year, that is FY26 and FY27? If you could give us some guidance over there.
So, if you look at our 3-month PAT or revenue as well, we are at about 560 crores of revenue. We are at about an EBITDA of about 40 crores and a PAT of about 23 crores. We expect this same trajectory to continue, even in the future, as well.
All right. It was great chatting with you, Mr. Hegde. On that note, we'll let you go, and best wishes for your upcoming IPO.